This is Cashology by FMBO, a podcast devoted to the art and science of managing your money. It's like school, but your only homework is living your best financial life. Class is now in session. So to start off today's episode, I thought we would tell a little joke. Why did the donut maker retire? Because he was fed up with the whole business. That was really good. Welcome, and thanks for listening today to the Cashology podcast, hosted by your guide on the path to financial savvy and amateur comedian, Julie Wyans. Today we are joined by Kim Preheim, relationship manager in our community banking group at FMBO. Welcome, Kim.
Hi, good morning.
Tell me, what kind of businesses do you work with?
I work with small and medium-sized businesses in the Omaha Metro, helping them with their banking needs, whether it be deposit products or loan products and anything else in between.
Well, that's excellent, Kim. You are absolutely a subject matter expert when it comes to our topic today, which is important financial considerations when setting up a small business. Before we dig into this topic, let's get some disclosures out of the way.
Indeed, milady. Let us proceed, lest we delay the financial wisdom further. Verily, I say, investment products are not FDIC insured, not a deposit or any other obligation of the bank, not insured by any federal government agency, not guaranteed by the bank, may lose value. This podcast should not be copied or reproduced without permission. Information and statements within the podcast are subject to change without notice. The Cashology podcast is for informational purposes only and is not intended to constitute investment advice or recommendations. First National Bank of Omaha does not make any representation or warranty as to the accuracy or completeness of any information or statements within this podcast. When making decisions about your financial situation, consult a financial professional for advice. Podcasts are not regularly updated and information may become outdated. Deposit products are offered by First National Bank of Omaha, member FDIC, equal housing lender. The Cashology Podcast, copyright 2021, First National Bank of Omaha. And now I bid thee victory on the field of finance, milady. Huzzah!
So, Kim, I know you come from a family of small business owners. Can you tell us more about the businesses that they own?
Yeah, so when I was younger, my dad owned and operated a small mechanic shop. He worked at a co-op in a farming community where we lived, but on the side, he repaired tractors, vehicles, did small engine repair for local farmers. And then my mother, for most of her life, spent her time in the restaurant business. And my mother spent the last 15 years of her career operating the Bonanza restaurant in Yankton, South Dakota.
Wow. What is the Bonanza restaurant? What kind of restaurant is it?
It's a steakhouse that offers, steak, chicken, shrimp, and a salad bar buffet, which was actually one of its more famous aspects.
Well, I really want to dig into this topic, Kim, and utilize your expertise to learn more about how small businesses can succeed financially, because there seems to be nothing more intimidating than the idea of owning your own business and being your own boss, mainly because you have to pay yourself, right? So let's go to a launch of a new business. I have an idea. I want to start this out, but I need to assess what is the risk versus the reward.
Let's focus on the rewards first. Being in control of your own destiny and the business and the direction that it follows, the customers that you want to serve, and the services that you want to provide. And there are most definitely risks associated with owning your own business, primarily financial implications for your family and financial implications for your employees should things not work out as planned.
Really excellent point, Kim, because, when you become a small business owner, likely you won't be the only employee for very long if you've built a sustainable and scalable model of a business. So you'll have people who rely on you. That's a lot of pressure. And honestly, a lot of financial implications when it comes to the ability to pay them, also the ability to, give health insurance. I mean, there are so many things to consider when owning a small business, but let's start back from the basics. When I'm thinking of my small business, I likely have to have a plan, right? A business plan of some sort that not only has the strategic vision of the business, who I want to serve, to your point earlier, but also how I'm going to make money. Tell me a little bit about the business plan when it comes to your banking needs.
The business plan, in my opinion, is really your roadmap. for not only the start of your business, but the journey along the way. And specifically, the bank utilizes your business plan to help gain an understanding of how you plan to own and operate the company. And we use that so we can better understand the financial needs that you're facing currently and that you may experience as the life of the business grows.
That makes a lot of sense. So you definitely want to, when developing the business plan, not only think through launch in your first couple of years, but make a 10-year roadmap, maybe even longer, to see where I want my business to grow, how I want it to grow.
I would agree. And also, it's something for you to check your progress. A couple of years in, take a look and see where your plan was, where you thought you would be at that 2-year mark. And if you need to make adjustments to get it back on track or make improvements.
Absolutely. And being a good small business owner means that you do have things written down, goals written down, especially when talking with a banker like you, Kim, right? Because I'm really curious to know your perspective on the viability aspect of a business. So obviously you look at how prepared a small business owner is when starting business with them, but also you take a look at how their business is actually going to make money, right? Tell me more about that viability piece and what you look at.
Yeah, one of the things that I look at is, what array of products or what services are they offering? And are they putting themselves in a position of a single or only 2 streams of revenue? Or are they thinking beyond that to prepare for, one thing the pandemic has taught us, that being prepared for disaster is absolutely important. And with that, thinking about how can I modify my business if needed, if something like this were to occur.
From what you just described, do you look at the personality or temperament of small business owners to assess their flexibility and what they would do in the face of adversity?
I do. It's definitely a question I ask when talking with them, especially after, as I've mentioned, this pandemic. It's something worth considering. When you're starting your business, how flexible can I be? Where can I make changes? And assessing that in the potential business owner is a very important part in getting to know them.
So we've outlined that a potential small business owner has to have a vision. They need to understand the customer. They need to understand their lines of revenue that they're going to be generating. All of this should be summarized in some sort of business plan. Let's talk a little bit about funding and how that happens. What options are there for someone with all of that pre-planning done?
There are many sources of funding. Banks will use small business administration loan programs as a tool to help secure funding for startup businesses when it's otherwise difficult to obtain financing conventionally. Some additional sources of financing are credit cards, family and friends, and private investors.
Tell me more about getting involved with the bank. At what point in the small business journey do you recommend a potential small business owner reaching out to a bank to discuss options?
I would say at any point, whether it's at the beginning of the idea, early portions of the planning phase, it's important for the borrower, the business owner, to understand what the bank is going to ask for when it comes time to approach them for financing. So I would welcome a business owner, day one on their planning journey to visit with a banker and ask some of those questions so they can understand how the financing side of this process of starting the business works.
And who specifically should they reach out to at a bank? What type of banker?
I would say somebody that is either on the commercial lending team or community lending team, someone with experience working with businesses on a day-to-day basis.
That makes sense. And that could be an absolutely no strings type of meeting, just meeting with a banker, getting their perspective. Doesn't necessarily mean you have to do business with that individual, but it's helpful to start that relationship early, right? And that's something you'd recommend?
Absolutely. It is not just our job to make loans for people. It is our job and our mission and our pleasure to offer guidance and advise individuals on the path to their their financial goals.
That's great, Kim. You've been a really great guest today, and love your experience with small businesses. Obviously, you've helped so many in the community, so we really appreciate it.
Thank you.
Visit fmbo.com for all of your small business banking needs. Thank you, everyone, for listening. Don't forget to subscribe and keep an eye out for more Cashology episodes coming your way soon.